Hello everyone, welcome to another training session. This time is with me. My name is Andria. I will present this on behalf of Stuart, and Stuart tomorrow will represent mine on behalf of me. Actually, we switched. We had to switch. Unfortunately, something happened and we had to switch our webinars. So today I will present the Awesome Oscillator, and tomorrow Stuart is gonna present my own volume webinar and the volume indicators webinar that I was about to present tomorrow. So as usual, this webinar is recorded. Okay, it's been recorded, so you're gonna receive at the end of the day or by the latest tomorrow the recording in your email. If you're struggling to find it in your email, you should also check the spam folder. Sometimes it is put it into spam. Yeah, also in the handout section I will upload just now the slides for you to have it, like for future reference or something. You might need them, etc. Oh, why is that? Cannot share. Why is that? Seems that I'm struggling to upload the handout. Let me try again. Don't know what's wrong with it. Okay, until I provide the handout section, I'm gonna go through the disclaimer as usual. By the way, please stick on the question box if you're facing any audio or visual issues, and don't hesitate to ask anything you want. I will be here to reply. I will be here to solve any query that you have. Okay, so stick in the question box anything you need, and I'll be here to help you. In general, our email address is webinars@hfm.com. Okay, so you can contact us for any issues that you might facing in your trading or any questions that you might have. Okay, for some reason I cannot put the handout on. I'm not sure why is that. Okay, guys, for anyone that wishes to have the handout section, please send me an email at webinars@hfm.com. Okay, so disclaimer: this material is provided for general communication purposes only and does not constitute an independent investment research. Nothing in this communication contention should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose or a solicitation. Sorry, nothing in this communication contention or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information is gathered from reputable sources, and any information containing indication of past performance is not a guarantee or reliable of future performance. Users acknowledge that any investment in leveraged products such as forex and derivatives and CFDs is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high risk, a level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. So risk warning is out of the way. Guys, I would really appreciate if someone sticks on the question box that you can see, you can hear me loud and clear, and you can see my screen as well. Okay? And since there is a problem with the handout and I cannot upload the handout section, I will provide you a link in order for you to download it. Unfortunately, it's the only way that I can figure out that I could easily send it to you right now. So I'm gonna use the WeTransfer. Unfortunately, I don't know what's the problem. So to everyone, here's the link in which you can download the handouts, the slides of this webinar. So, Awesome Oscillator. Today we're gonna see everything about Awesome Oscillator, along with a lot of examples that Stuart has put on his slides. So we're gonna see what it is first of all, what kind of formula it is using in order to create this indicator, to be created, how to set up on our charts, the rules based on Awesome Oscillator. So obviously how we're gonna read and use the Awesome Oscillator as a trading indicator, combine Awesome Oscillator along with other indicators, and what is wrong with it. I mean, obviously there are a million of indicators out there that you can use, but no one is perfect. All of them have some disadvantages, small ones, limited ones or not, but nothing can be perfect, right? There is also a space for some errors. So what can go wrong? I'm gonna put on what can go wrong in order for you to be aware. So, and of course, you can interrupt me anytime you want and ask anything you want in regards to Awesome Oscillator. So first of all, let's go through on what it is, okay? Okay, Stuart has put on also over here a very, very interesting book called New Trading Dimensions, which actually presents some strategies, which some of them include Awesome Oscillator. Is very, very helpful. I'm not sure if you can find it in an online version, free version or not, but it's good to search for it. And why is that? Because in this book has been, the author of this book is Bill Williams, which also is the creator of Awesome Oscillator and also the creator of fractals and alligator oscillator. Okay, he combines the strategies which with the indicators that he created. So first of all, what Awesome Oscillator is? So as I said, it has been developed by one of the most famous technical analysts and chartists, Bill Williams. But what it is, okay? First of all, is an oscillator, and actually a non-limited oscillator. Okay, so what it does is based, firstly, okay, as I'm saying over here, it is based on moving average. So in its formula includes a simple moving average, the 5 and 34. These two are moving averages. I will show you exactly how it looks like. Here it is. I will share my MT5 with you. So this is how it looks like. It's a bar chart with green and red bars, and it's not limited, so it's not like RSI, for example, that is from 0 to 100. This one doesn't have limits, but we can see that it switches from negative to positive, so it has as a neutral zone the 0 line. Think about it like MACD, that is, it has the histogram lines turning from negative territory to positive territory, from positive territory to negative territory. So this is how it looks like, and it's under, you can find it under the Bill Williams tab in our navigator, Awesome Oscillator. Here it is, okay? And these are all indicators of Bill Williams. So the alligator one, the fractal one, the Cador one, market facilitation index, oscillator. So six indicators of Bill Williams are here available in MT4, MT5. Yeah, for free, obviously. So as I said, it's a non-limiting oscillator, okay? Which, what does it shows? It shows whether we have a strength or a weakness of an asset. So it shows momentum. That's why, and is used like that. So it's used, widely used by traders in order to measure the market momentum and to affirm trends or to anticipate possible reversals. Something similar, not quite the same, but something similar with MACD, for example. So, and it is quite effective. So it does this by effectively compare the recent market momentum with the general momentum over a wide frame of reference. So it looks like MACD. It has the same philosophy with these bars, the green and red bars, and it is similarly with MACD. You can see that it presents momentum. As I already said, it's been used for identifying momentum or to affirm trends or to identify any potential reversals of the trend. Now, let me just keep on. So, something that I missed is also, other than the reversals and strong trends, you can also confirm a continuation of a trend. Okay, so pretty similar with MACD, okay, but different formula on the back and different philosophy. And as I said, it does it a bit different because this one compares the near-term momentum with the long-term momentum. So it compares two different momentums over a different frame of reference. It is very, very useful for technical analysis, obviously. And why is that? Because it takes more standard momentum oscillators and adjusts the calculation in order to strengthen a common weakness among them. But it's even more effective when you will try to confirm a signal or condition, something that you, so to give you some confidence and some confirmation on your decision. So here, once again, how it looks like, and we're gonna go through this numbering that we have put on in order for you to understand how it works and what does it signals. First of all, just to clarify why we are seeing some bars in red and some bars in green. Okay, so just a second, let me double check whether I have the formulas written somewhere. Okay, no. So just to clarify at this point before we analyze, as I said, it's based on the 5 and 35 period simple moving average. Okay, the formula behind it is based on these two moving averages. Okay, so what are all these? First of all, let's clarify what does it mean when we have green bars and what does it mean if we have red bars. Okay, so take it step by step. Let's start with the green. So a bar is green, okay? A bar is green when the value of the Awesome Oscillator is higher when actually can you see the bars? You can see the bars over here, right? So when we are getting a value which is higher than the previous one, okay? Then we are getting a green value. So actually, it might be more helpful if I wrote somewhere the formula, because I forgot to put it on. So just let me write it somewhere. So no, okay, over here, just for reference right now, okay? Just for reference right now. So the formula of Awesome Oscillator equals with the 5 simple moving average, okay, minus, actually, okay, first of all, median price. Oh my God, I'm so awful on this. There is a way to write without being like that. I think with the formula, this will help you understand. Give me a second, guys. Give me a second. Pen, laser pen. Okay, I don't have it. Okay, so first of all, in order for this Awesome Oscillator to be created, okay, the formula is taking the high price minus the low price for a period over 2. So to find the median point of a particular time frame, okay? Then, in order the bar to be created on the Awesome Oscillator, so the actual result of the Awesome Oscillator is the 5 is the simple moving average, okay, of this price of X for a 5 period 1 minus the simple moving average. So it is taking the last 5 median prices and it gives us the simple moving average of the last 5 simple moving averages minus the simple moving averages found by summing up and finding the average of the last 34 median prices. Okay, this is the formula. So finding, first of all, it calculates the difference of a 34 period moving average and 5 period moving average. Okay, and more precisely, the simple moving averages that are used are the ones, and are not the calculated ones based on the closed price, but they are the ones of based on the midpoint. You don't need to know that, okay? The Awesome Oscillator calculated automatically is just to give you an idea. What does present? It presents the difference between the 34 simple moving average based on the median point and the 5 moving average of the median point, of each candle's median point. So, why we're having green and red? Okay, so green, that we can see the Awesome Oscillator posting green bars, okay, because if it shows that if the value of the bar is higher than the previous one, and it will give us red bars when its value is lower than the previous one, both above and below the 0 line. So the green bars represent ups when the Awesome Oscillator value is greater than the previous bar, and the red bars represent downs where the value is lower than the previous bar. So, and remember that we have this as the 0 line as well. So the 0 line is in the center and the bars are plotted based on the calculation of these two moving average. So the chart over here, okay, which was taken from an MT4, it shows these ups and downs on a price chart, and more precisely on the dollar Swiss price bars. So these are signals, okay? These are signals. So we need now to figure out what signals they are showing us. Okay? And let me be more precise. So yeah, here is the formula again. Okay, I'm not gonna go through that because we have seen it already. Just remember that whatever you're taking is based on the midpoint of each candlestick. So if you're a trader that is trading in an hour chart, so what the Awesome Oscillator will give you, it will give you a comparison of the 5 simple moving average and the 34 simple moving average, but based on the midpoint of all these 1 hour candles that you have, okay, on the midpoint. That's why anything positive, so a positive reading from the Awesome Oscillator, means that the fast moving average, so positive reading implies that it will be above zero, right? Remember that Awesome Oscillator is plotted below or above zero. So anything positive, it will be drawn above zero. Anything negative will be drawn below zero. So anything positive, so above zero, what that means, it means that the fast moving average is greater than the slow moving average. So which is the fast moving average one? Is the 5, right? The slow is a 34. This is where our Awesome Oscillator is based on. So any negative reading implies that the fast moving average is less than the slow moving average. So, okay, how to set it up and why it's good to is good, why is positive, why we are considering as an advantage the fact that the Awesome Oscillator is using midpoint instead of closing point of each candle. So first of all, it's been considered as an advantage of using the midpoint because it captures the volatility for the time period that we are interested in. But it cannot really stand alone. It's good to combine your Awesome Oscillator either by monitoring the price action or by using an extra indicator, but that's something we're gonna see later on. For the time being, you should know that since it's an oscillator that combines the moving average and volatility, that's the reason why it's so powerful. It's pretty much because it suggests both momentum within a mean reverting system, because it combines two things, moving averages and volatility. So how you can put it on, as I said, it's under the Bill Williams tab in the navigator. So I will show it once again just to make sure that we are on the same page. You can either enable navigator over here. Can you see this is the folder with a star at the top, or insert. You go down to the Bill Williams and you choose Awesome Oscillator. Alternative, if you enable your navigator over here, then your navigator will present it over here, and you can drop down, go to the Bill Williams ones, and you drag and drop, and you can see the Awesome Oscillator. Value up, green, value down, red. You can enable whether you can see it in a particular time frame or you want it to be applied in all the time frames that your platform presents. And once you do that, you will see it. You will soon see it at the bottom of your page, your chart. So it's pretty straightforward on how you can apply it. Okay. Actually, so let's take step by step. We said what the green values mean, we said what the red values mean, and now we need to see some rules in order to help you understand how you can use it, how you can interpret it. I initially said that that you can use this indicator for identifying some signals for a continuation of a trend or for a potential reversal, right? So, and how you can get these signals? First of all, you need to identify whether your awesome oscillator crosses above or below, is actually seated above or below your zero line. Why is that? Because this will help you to identify whether the asset is in a bullish momentum or bearish momentum. Okay, so if the awesome oscillator is above the zero line, so it crosses above the zero line, this signals bullish momentum. Okay, if it has just crossed or if it's above zero line, is keep moving higher, then it signals bullish momentum, and that implies to a long position. If the zero line, however, crosses below if the awesome oscillator crosses below the zero line, this signals bearish momentum. Okay, and that implies to a potential short position. But have in mind that this can easily change. So the awesome oscillator aims to detect whether a trend is continuing or starting to reverse. So I will explain these 3 bullet points later on. First of all, I would like to show you some examples of bullish or bearish momentum, okay? So, just first of all, here is a dollar Swiss example, daily one, but it doesn't matter. As I said, it can be applied to any time frame, okay? So, and we said already, you already know that if it's above zero, it suggests bullish momentum. If it's below zero, it suggests bearish momentum. We are getting green bars if the value if the value is higher than the previous bar, and red if the value is lower than the previous one. So we have 3 elements to consider: the color of the bar, and whether it's above or below the zero line. Okay. Now, so there are a lot of ways to use Awesome Oscillator out there, but let's start with the basics. Okay. So over here we have a dollar Swiss, as I already mentioned. So, and we have spotted over here a change of the Awesome Oscillator from negative into positive one, right? Okay, so there was a continuous green bars with higher continuous green bars with higher value compared to the previous bar. So can you see that? The very first green was over here. The very next one was higher. The very next one was higher. The very next one was higher. So there was a continuous green bars. And at the end, after 1, 2, 3, 4, 5 sessions, at the 6th session, it managed to turn positive. Okay, so that's one thing. So over here, we were getting that the momentum is changing. Actually, the momentum, the bearish momentum is detecting. And eventually we have, I find out that the bearish momentum turned into positive just here, right? When it finally turned. Was that too late? Was that too early? So how we can figure out when is the right time to consider that there is a reversal of the momentum. Okay. Okay. So the fact over here that it finally turned above the zero line, okay, that was an indication that bullish momentum is now the case, indicating that the short-term momentum is increasing faster than the long-term one. Okay, and that an indication that there is bullish momentum, and that implies to a long position. And if you check carefully check the candles as well, you can see that here is when the confirmation came that you can enter long. Okay, so because why is that? Because after this strong rebound over here, a bit of a correction followed, then another bullish candle, very decisive one, and the next one, and the next one. So on the third consecutive bullish candle, after this bottom over here, we finally got a turn of the Awesome Oscillator into a positive one. So that was a confirmation that over here, oops, let me clear a bit this mess, that you can finally open a long position since the bullish bias has been confirmed. Okay. That's one way to do it. Obviously, some of you might say, but wasn't it too late? No, it wasn't. No, it wasn't. It was, however, the right timing, because with this way you have limited the possibilities of that move to be just a correction instead of a new trend. But that depends solely on you. The continuous green candles could also be considered as a bullish, actually not a bullish bias, but as a detected bearish bias. So, sorry. So that could also, you could have also entered the market earlier, but the confirmation came over here. So that was considered as a better timing in regards to if we consider risk management, and we want to make sure that we have limited the risk of being wrong, right? Okay, so another example, okay, another example could be, okay, could be number 8 over here. Finally, another move over zero, combined with this consecutive rally for many sessions until it finally crossed above zero, and we finally got it into a bullish bias, suggesting that there is further steam to the upside with bulls taking the control. And that lasted for another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions. Okay, so these are just bullish examples. Now I'm gonna show you some more. Other than, okay, first of all, let's see the vice versa scenario, which considers to be a move from bullish, from the positive, into the negative territory, from above zero to below zero. Such an example is the point number 4 over here. So over here we were getting consecutive bearish candles, consecutive red candles in our Awesome Oscillator, suggesting that there is a decreasing bullish bias, so that the bulls are less and less and less. until we finally see our Awesome Oscillator turning negative. And if you go up at that very moment and check our price action, you can see that there was a continuous, after retesting this area for 4 sessions in a row, it finally managed to break below that territory, and it kept posting lower lows and lower highs for 1, 2, 3, 4, 5 sessions in a row. So that was a confirmation that yes, that is further stem to the downside. The momentum has turned bearish, so it could be a nice short-term short position. Okay, and indeed the next day the asset had a really sharp selling of around 80 pips, if I'm not mistaken, 80 pips, 80 pips. Okay, another bearish, another short position, an example of a short position is number 12 over here, right? So a lot of alerts in regards to a detected bullish power, okay, that could allow us to enter earlier, but the confirmation came, so that's up to you solely, but the turn of the Awesome Oscillator came late afterwards over here. And if you check the candles, you can see 3 decisive bearish candle, consecutive bearish candle, but a bit of a correction over here. So what we are getting some, so let me be precise. After a decisive decline, okay, here, the asset rebounded a bit and it was consolidating. And during the consolidation over here, our Awesome Oscillator already turned negative. So what was the signal for? Why we were considering a bearish signal? Why we were considering a short position? First of all, because the Awesome Oscillator turned negative. And second of all, that rebound, it was limited. And it was struggling to extend gains, and it was in a sideways movement, struggling to extend higher. So that was an indication that the bears are in control. And indeed, 5 sessions afterwards, bears took the control, extending and pushing the asset lower, and that continued for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days in a row. Okay, so even if you weren't sure whether it's the right time to enter short, okay, because of this consolidation, this candle over here, that breakdown over here of this range in combination with the turn of the Awesome Oscillator into a negative one was a good, it was a strong signal that there would be a fresh drift lower for dollar Swiss. So that's initially how you can, in the very first phase, how you can read Awesome Oscillator. Now let's go a step into the a bit more advanced stuff, okay? And what I mean by advanced stuff. So I will focus only on the turnovers, right? We said that number 1 over here was suggesting a long position. Number 8 also suggesting a long position. Number 4 is turned into a negative side, suggested a short position. Number 12 also suggested a short position. Okay, let's assume that you have taken these positions. Where shall be your exit level, right? Because sometimes, actually, the tricky part is not the entry point, but also the most tricky part is the exit point, whether it's the right time to exit and close our position. So I will take a step backwards and go back to the rules of how to use the Awesome Oscillator. And this, in the third bullet point over here, we are suggesting that exit should be considered when candle changes color. Okay, so let's go. Let's see. now I'm focusing only, let's do again the number one. So long position. So when is the right time to exit? So there are two ways to consider an exit. Either when the bar is changing color, that's the very number one. So here, over here, the fact that from green it turned into red, that could be an exit level. Okay, so that means over here, so you will have gained around 70 pips. Okay, or another alternative will be once it goes to zero. Okay, when over here, so here. But usually the Awesome Oscillator works better as an exit point at the change of the color. So consider the change of the color as an insignificant exit point of your trade. So I will have be one over here, another one will be over here. I think if I'm right, no, it was earlier here, over here. If we have taken a long position at the 8th over here, an exit will be here, which was brilliant, absolutely brilliant, because this distance is around 243 pips. That's huge. Okay. Now let's see the negative scenarios. If we have taken a short position, so let's take, so the short position that we have presented so far, it was number 4 and number 12, right? So number 4, it was a short position right over here. So an exit point will have been at the change of the bar over here, which implies 2 here. I think it's this candle, if I'm not mistaken. So that will give me around, come on, I don't know, around 60 pips. 60 pips gains, no, 70, 80, somewhere there. If I was taking a short position over here, and remember that I mentioned that the breakdown of this candle along with the negative territory over here could allow me to enter short on the breakout here. So that will give me, and the very first turn of the color is this one. So will give me around, come on, here, an exit over here, somewhere here, right? I'm not really, I don't have it. Let me just check. So that candle, that change of the color will give me an exit. Should be somewhere here, if I'm right. If I'm right, it should be this one, okay? So that will allow me another 80 pips, around 80 pips, or a partial close, right? You can close the 50%, for example, of your trade here and wait to see what will happen with the rest of the trade. So the next 50%, for example, will be that one over here. So that means somewhere here. So another, come on, 9, ooh, 100 and, come on, 9991 minus 9867. 867, that would be another 124 pips. So you see, you can either consider the change of color as an exit level or a partial exit level. Okay, so let's say that I'm gonna close 70% or 60% or 50% of my trade here, and you will decide when you will exit the rest of your trade later on. Okay, so now, are you okay so far? Shall I move on to the to a bit more advanced slides? No? Any questions so far? Nothing? No? No one? Come on, guys. You're 20. There are 20 people here. Anyone? Any questions so far? Or shall I move on? So, okay, let's move on. Let's make it a bit more tricky. Okay, so you over here in my example, in Astrid Stewart's example, you can see number 3 over here. Okay, that was exit point, my mistake. So 6 over here, 11 over here, 13 over here. So this could have been our potential exit points, but also they could be used as additional entries. So what I mean by that, let's take it step by step once again. So over here, a long position with a potential exit at number 3, right? Right. But over here, okay, we have a turn into red, from green to red. Okay, that means that the bullish momentum is detected, and we had also a strong bearish candle over here, right? So that indicates a short-term correction or pullback, if you prefer. So you can use this for openings for extra positions, if you prefer, on the opposite direction. So that was a bearish signal, but a limited one. So on the correction, on this pullback, limited pullback of this uptrend. Okay, so again, it's the same mentality. So a strong red candle, okay, along with the change of the color of the Awesome Oscillator, which implies into a short-term short position, which you can take and in which you can exit as soon as you see a change of the color again. So that would be somewhere here. Okay. Again, another example over here. We breached the peak of our trend, peak of our Awesome Oscillator, and we started seeing consecutive red bars combined with lower highs and lower lows in our price action. So that is also a bearish signal, so a short position, right? With a potential exit once the Awesome Oscillator turns into green again. So here it will be our exit level. A tiny bar over here will be our exit level. So that would be somewhere here, if I'm not mistaken. So benefiting on some near-term pullbacks or limited corrections. Yes, the Awesome Oscillator is also in MT5 DRD. What is the time frame it will be used? Any time frame. So this is a daily chart, but if you're an hour trader, you can use it in 1 hour. That's fair enough, or 30 minutes. It's up to you, okay? It's just up to you, really. So over here is dollar index 30 minutes chart, okay? Up, 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 continuous red candles until we breach a peak over here, and we started getting red ones. And we also that combined with some lower highs, lower low candles. So that was a potential limited short position until we finally see this turn from red to green, and that could have been our exit area, right? So again, it's up to you where you want to use it. Okay, so but you see over here dollar index has started. Okay, it turned into positive territory in the 30 minutes chart since 11th of August in this 30 minutes chart. Okay, so all these turns from green to red or red to green, it could have been some near-term positions for you. You see that? So short one, long one, a bit limited though. Another long one, over here, until with an exit area over here. Then on the pullback on this bearish full body candle over here. Okay, that was a not that we're still getting green bars on the Awesome Oscillator, so we couldn't take an exit and an entry. Entry has been taken over here, to be more precise, when this red candle on the Awesome Oscillator came, along with the full bearish candle over here. Combine these two, were giving us some limited bearish momentum until it finally, until it finally bottom over here, and this bullish candle over here could consider as our exit point. Okay, then so you need to check both of them in order to be sure when is the right time to exit. Even if your Awesome Oscillator didn't change color, the fact that we had a nearly full body candle, bullish candle over here, it can be considered as a nice exit level. So over here to be more precise, so if we have taken a bullish position over here because of the green candles, okay, in this full body bullish candle. If we have taken a long position over here, we could consider exiting once it turns into a red one. So over here, so that will give us around, so how many? Give us around 23 pips. Not bad for a 30 minutes chart, right? So this is the way to be done. Okay, that's okay. Very tight, the very tight time frame, but yeah, that's up to you. Obviously, you need to combine it with something else. Either make sure that you are reading carefully your candles, the body of the candles, the tails, or maybe you want to use something extra as well, maybe a stochastic oscillator or some short-term moving average in order to help you confirm whether it's the right time to enter or exit, and etc. So let's assume that I'm gonna put over here my Awesome Oscillator as well. Where's my Awesome Oscillator? No, my stochastic, sorry. 5 and 3 stochastic, which is quite good for a 30 minutes and an hour chart. So for example, over here, okay, that rebound over here, which presented, so we have a rebound, but Awesome Oscillator is still red. However, I'm getting a bullish cross. I have a confirmed bullish cross on my stochastics over here. So that was an indication that things will change. And indeed, finally the oscillator became green again and a fresh new rally started. So combine it with something more in order to get further confirmation of your decision. But if you're gonna use it in a particular time frame, stick to that time frame. Don't move up and down to different time frames, okay? Or trying to read other time frames in order to take a position that is for an intraday one. So don't make conclusion in a weekly basis for getting a position into a 30-minute chart. So you get what I mean? Stick to the time frame that you're using. Analyze the Awesome Oscillator, the price action, and combine it with another indicator as well in order to take a decision, and stick to that. Put your exit level based on this time frame. Put your entry point based on this time frame, and stick to particular time frame. Okay, not multi ones. Okay, so now let's get back. So what else I wanted to okay, what else I wanted to mention over here? I think we covered this slide, so let's move on. Okay, let's move on and make it a bit more tricky. Any PDF for the lecture? Yes, I have sent already a link in order for you to to download it, I'm gonna send it again, dear Christopher. I was facing a trouble uploading the PDF, so I've sent it to you via WeTransfer. So click the link and download the slides from there. Okay, so let's make it a bit more tricky. What other signals can the Awesome Oscillator show us? So similar, I'm not sure whether you have seen a webinar in regards to MACD or RSI. So similar with them, it's good to check whether the peaks or the bottoms that we are getting by connecting with the trend line, the peaks or the bottoms of the Awesome Oscillator. So by connecting, sorry, the peaks or the bottoms of the Awesome Oscillator, we are getting some extra information, right? So what I mean by that? Okay, so these are called the twin peaks. So if we are connecting the peaks of the Awesome Oscillator or the bottoms of the Awesome Oscillator, this gives us extra information and is another way to identify potential bearish or bullish momentum using the Awesome Oscillator. So what you should be, where you should keep an eye on in regards to twin peaks. First of all, if you identify that your oscillator holds above 0, for example, but by connecting the peaks, you can see that the trend line is pointing down, okay? This is a bearish indication, okay? This is a bearish indication. If you're getting, do I have an example like that? Okay, let me get back. If you are in a bullish moment, if your Awesome Oscillator is above 0, and it has posted several peaks in which the new one is higher than the previous one, and by connecting them we are getting a trend that is pointing to the upside. Okay, this is a bullish indication. So where there are two consecutive peaks above 0 line, okay, above 0 line, this suggests a strong trend. If there are two consecutive peaks now below the 0 line, like these ones, okay, that was peak number 1, peak number 2, two consecutive peaks below the 0 line, where the second peak is, sorry, my bad, let me cover all the bullish the bullish scenarios first of all, and then we're gonna turn to the bearish ones. So, okay, as I said, if we are having two consecutive peaks above the 0 line, okay, with the second one higher than the previous one, that's suggesting that the bullish momentum is still on. And you can see that since after the second peak, we had indeed a pullback, but the asset rebounded quickly. Okay, once again. So that's a bullish scenario. Now, if another bullish scenario, which I don't have over here, but if we're getting, let me try to find one. No. Ah, I'm having one over here. So if we have two consecutive peaks below the 0 line, with the second one be higher than the first one. So let me connect them, right? The trend line is pointing higher. The second peak was higher than the previous peak. So that's also a bullish indication. And that is a more powerful one because it indicates that we might see a turn of the downtrend and the start of a new uptrend. Okay, so that's a bullish scenario. Now let's cover the bearish scenarios. If we have two consecutive peaks above the zero line, but the second is lower than the first one, so like in this case, that's a bearish scenario. Bearish scenario. Okay, so if the second peak is lower than the first peak and the asset in the Awesome Oscillator is above the zero line, that suggests bearish momentum. Why? Because it shows that the bulls have the bulls are actually losing the control of the market. Okay, so that's a bearish indication. So keep in mind also that this pullback between the peaks, if you see this pullback, should remain above the zero line. Okay, we cannot connect a peak that is above the zero line with a peak that is below the zero line. Never do that. Okay, if you see consecutive peaks at the same side, that's when it's giving you an extra sign. Okay, so which suitable indicator can be used in combination with? Okay, it depends on your time frame, Jacob. For example, if you are, I don't know, 1 hour or 30 minutes trader, you might consider the short-term stochastic indicator with settings 533. If you are a day trader, for example, you might consider RSI, okay, or moving averages as well. Depends on your time frame, okay? And try to combine it with indicators that you are already using, okay? One is an extra one is more than enough, I believe. Don't make it super complicated. Also over here, we having consecutive lower lows. So one new bottom in our chart, and over here, okay, we have another bearish sign, because by connecting the bottoms below the zero line, we can see lower bottom. So that's also bearish, suggesting that this long-term decline could extend even more, could last for longer. Okay, so there is no reversal signal for the time being. So how you can trade the peaks? So let me clear this mess again. You can trade these peaks by either taking an early entry than zero line. Okay, so if you see, for example, over here, we had consecutive lower lows, right? And we have also spotted this lower bottom in Awesome Oscillator, just suggesting that this long decline will continue. So you can take an entry point, an entry, okay? Once the Awesome Oscillator turns closer to zero, okay, so like here is like you're selling the peak. So this correction higher, after we have spotted that the outlook is still very, very negative, this rebound, this limited rebound, could be selling the peak entry. So trying to enter short at the peak of at the latest rebound. Okay, one way to do it. Another way to do it, okay, it sounds a bit contrarian, I know that. Another way to do it so is to sell either once the asset is at 0 or slightly above it. Okay, so of course, once you identify what we have just suggested, what we have just presented. Now, if you have identified a bullish signal by connecting the peaks, so for example, let me find an example for you. Here, the one that we showed earlier. So if you have spotted this bullish signal, okay, you could have entered long as soon as you have confirmed this as soon as you have confirmed that. So by connecting the bottoms, and you have seen that the second bottom is higher, significantly higher than the first one, so that's a bullish indication. Then you can enter long as soon as you see the asset, the Awesome Oscillator turning positive. You could enter long because that, as I already mentioned, suggests that the downtrend will potentially turn into the beginning of an uptrend. And this is what actually happened later on. This is an hourly chart, but this is what actually happened later. You can see that it topped at 120.27 over here. So if you had spotted something like that and you entered as soon as the Awesome Oscillator turned positive, then you could have benefit around, let me measure that, around 32 pips. So not bad, right? What else about Twix? What else about Twix? Over here we had a bearish signal again, lower peaks above the 0 line. So once you spotted that, you could have entered short as soon as you have seen a flip from positive into the negative. So you could enter short, and that will give you few pips gain down to this exit level, which is over here. Now let's see a different strategy. Okay, so let's see another strategy using Awesome Oscillator, the waiting for the retrace. Okay, that's another way to use the Awesome Oscillator. Waiting for the retrace. What we mean, if you have spotted that the Awesome Oscillator is above 0, okay, remember that above 0 implies 2 bullish bias. Okay, so once it's above 0 and you are seeing consecutive green bars, that means a long position, because it means that the bullish momentum is increasing and increasing and increasing, right? So as soon as if you have seen that, okay, you have seen that, any kind of a dip into the positive territory, okay, it could act as a buying into dip. What I mean, so not this one, this is a false dip because it reached 0, okay? But if you see something similar with this one, in which we have seen from green taken into red but not reaching 0, as you can see, and then eventually turn into green again, but it never went to zero, never, okay? Neither a small body one. So that was a buying the dip opportunity. So over here on this turn, over here on this rounding bottom, if you prefer, of the Awesome Oscillator, you could enter long again if you so you could add on your position, or you can take a new long position once you spotted this dip, this buying the dip opportunity over here. Or if your Awesome Oscillator is below zero, okay, so it's below zero, you're getting red candles, red candles, red candles. So you know it's in a bearish mood. You might already had a short position, or you might not. But you were like monitoring the asset. You have seen that it turned green. So over here, it was below zero, down, 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 down. But suddenly it crossed green just for 2 sessions only, and then turn quickly into a red one. So that could have been another selling position. So that means sell into big picks if you are below zero. So that's another short entry. Why this is a short entry and this is not? Why 6 is a short entry but 8 is not? Simply because over here we can see that it turned into green, but it continued to be green. So green, 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 green. So there wasn't any confirmation that we can sell into the peak, right? Confirmation that we could sell into the peak came over here. So from green, it get into red again, right? And on the second red, we could sell again, another short position over here, right? With exit point number 11. So if you have selling to the peak at number 6, you could exit your short position at number 8. If you have selling to the peak at number 9, you could have exit your position at number 11. So these are continuation with the trend signals. You can either hold your overall short position and add to it by this selling into peaks indications over here. So having some near-term extra short positions once you spot something like that. Or alternative, if your asset is in an uptrend, but you're seeing some dips, limited dips, not to zero. Don't take that as a buying the dip opportunity. It needs to be above zero. Okay, that would be a chance to buy into dips. And I cannot see anything else to show you as an extra, but yeah, this is a buy into the dip above zero opportunity. So let's go to the fourth strategy, the reversal strategy. I think we have already covered a bit of that, but that's just giving you an idea on what kind of more advanced signals the Awesome Oscillator is giving you. So over here we had seen the Awesome Oscillator, it was below zero, so that's a bearish momentum. Okay, so indeed the price was also moving lower. And then it turned at zero, above zero, but very, very close to zero. So that suggests consolidation for a few hours, right? And then it started increasing and increasing until it peaked over here. Okay, right? You following? So what's going on over here? So from bearish, from below zero, it turned into above zero, right? It peaked over here and then started detecting. So it is above zero, but it started detecting. That is a period in which we should check whether we could go short. So you need at least 2 greens, okay? The second one to be higher than the first one, followed by a red a bar, okay, lower than last red. Okay, so if you have this combination, at least 2 greens followed by a red candle, okay, that would be a sign of a potential reversal. Okay. Now, vice versa scenario. If your Awesome Oscillator is below 0, okay, if you have spot at least 2 red bars, the second lower than the very first one, and then followed by a green bar, okay, that would be another indication of a potential reversal, okay. And if you combine this with consecutive bullish candles or in your chart, then that could be considered as a potential long position. So you see, so 2 consecutive reds, the second lower than the first, followed by green bars. Okay, we have consecutive green bars over here, and that is combined with 3 bullish candles in our chart over here, suggesting rebound. Okay, so that could have been a long position because there is a reversal of the trend. Okay. Now in the vice versa scenario, if we've seen at least 2 greens, so over here followed by a red, that could be a short position because there is a reversal, in the near term. So what else? What else? So as I said, it could be combined with several other indicators, stochastic, RSI, or over here we have MFI as well. So it depends pretty much on your time frame and your preferences. I mean, in regards to which other indicator you're gonna use. Over here, there is another 1 hour example of cable using the 20 simple moving average, our Awesome Oscillator, and MFI 14 period 1. So you can see that over here, what we are having, we have seen a peak of our Awesome Oscillator above 0, and then turning into, followed by a red bar. So over here we had a question mark. Is this we're gonna see a pullback? We're gonna see a reversal of the trend. So that was a bearish signal. And if we zoom in and check our price action, at the time that the Awesome Oscillator turned into a red one, and we were actually got this bearish signal over here. If we check our chart, we could see that there was a sharp selling with for 1, 2, 3 sessions in a row, with this latest session crossing a really big bearish candle, which actually closed below the 20 moving average. And we've checked our MFI as well. We can see that it started a sharp fall. So you can see that it has a sharp slope to the downside, crossing below 80 and pointing further to the downside. So all 3 indications, so the crossing below the 20 simple moving average, the turn of the Awesome Oscillator from green into red, along with the MFI turning below 80 and pointing further to the downside, it was an indication for a short position with a potential exit. Actually, either a potential exit would have been once we either have a confirmation that the asset has started turning, has actually turned and extends above the 20 simple moving average, or once we were getting consecutive green bars in the Awesome Oscillator. So that was not a very nice exit point because it was very close to 0. So a nice exit point will have been this one over here, okay? Or once it turned positive completely over here, or once it turned for 2 consecutive sessions above the 20-day moving average. So this is not a nice exit point because it didn't close above 20. It retested it, but it was struggling to break it, so it turned back down again. So that would have been a nice exit point, and that one as well. Once the Awesome Oscillator turn into positive again, or once the asset turn above the 20 simple moving average. So you look at the distance of that; it's huge. Okay, so that's why it's better to be combined, because that gives you extra confidence. Now, we have reached the end of our webinar. Over here, we have put on some disadvantages of Awesome Oscillator. So, so first of all, you should consider that high Awesome Oscillator values does not always mean a retrace. That's why you need to cross-check it either by monitoring the body of your candles or by using an extra indicator such as moving average or MFI or RSI, depends on your preferences. Also, it lags, okay? So make sure that once you use it, make sure that it gives you signals not too late. Okay, so check it before you use it. Whether it works better or better on higher time frames or not, I cannot reply to this question because it changed different per asset. So for the daily, for example, for the daily, I don't know, daily dollar index, it might be perfect, but for the daily euro pound, it might not. So check it before you use it. If we are facing low volume markets right now, like now, because it's August, people are in holidays, we have a very low liquidity in the markets. So that's why you need to be in general careful, because all the indicators might be misleading during low volume markets. So be careful. It's not only about Awesome Oscillator, but that bullet point implies for all the indicators. Always use it with extra indicator, as I said. You can see how helpful it could be for identifying entry points, for identifying exit points, for confirming your decision, etc. I mean, this is a brilliant example on how useful is to combine the Awesome Oscillator with 1 or 2 extra indicators. You have seen that the body of the candle over here, along with the MFI, confirms the short position. And over here, the fact that it crossed above 20 for consecutive sessions, or the fact that it turned positive, the Awesome Oscillator turned positive, were brilliant exit points. Because if we have taken as an exit point, I don't know, which one? If we have taken the MFI in this case, we might exit it late than expected, or so on and so forth. Depends. So what else? Okay, that's the summary of what we have covered. So now is a good time for any further questions. If not, I'm gonna call it date. It's brilliant and it's very, very effective in trending markets. It's clean, simple, easy to understand. It can help you identify short-term and long-term reversals or continuations. Simply because it's based on the 5 and 34 moving averages. It can lag a bit sometimes, but that's why you need to use extra indicators just to confirm your the signal. The fact that it's using midpoint instead of closing prices of a candle, it helps you spot momentum and volatility. It doesn't work if you have a low volume market, okay? And yeah, that's pretty much it. Here are some extra books for further reading and final thoughts. Books that are quite essential if you're new in trading. They're very, very, very helpful. So there's a link, a list of them. Stuart is always putting those as suggestions in his webinar, so I keep his slides as it is in order to show you that as well. But we are done for the day, guys. I know that you might need time to comprehend everything we have covered so far. But if you need any help, I'm here to help. So send us an email, webinars@hfm.com, and I will reply as soon as possible. Okay? You're facing any issues to understand and comprehend Awesome Oscillator, come and ask me and tell me, Andrea, I have done that and that and that, it didn't work. What did did wrong? Yes, it can be used in combination with exponential moving average as well. If your chart suggests that it works better with an exponential moving average, yes, feel free to use it. So let's see. I will put a 10 exponential moving average because I will use it for a 30 minutes chart. So let's see. Yeah, why not? It looks that actually, let me just put that 15. Let's see. That's a much better support level for my dollar index 30 minutes chart. Yes, it's up to you. Just monitor whether it's a nice the exponential moving average that you're gonna use is giving you accurate or the most accurate signals. Okay. So just play a bit with it. Is it giving me correct reversal signals or not? Over here, yes, that's nice. The turn over here was okay. Support my asset there. Yeah, for example, the 15 exponential moving average in this 1 hour chart dollar index is it looks to support quite well my dollar index. So why not? Yes, it's up to you. It's up to the asset that you're trading, the time frame that you're trading as well. So just go back and check, is it giving me a nice support or resistance level? Is it giving me a nice signals, yes or not? So that will reply to your question, my dear Paul. Okay, so that was it from me, guys. I'm gonna call it a day. If you need anything, just don't hesitate to contact me. Thank you very much. Have a great day ahead. And we'll see you again tomorrow with Stuart and the volume indicator. Yeah, that's it. Thank you very much. Have a great day ahead. Bye-bye.